US stocks suffered steep losses as US President Donald Trump ramped up his attacks on Federal Reserve Chair Jerome Powell. This prompts investors to worry about the central bank's independence, even as they grapple with the effects of Trump's ongoing erratic trade war.
All three major indexes tumbled, with big losses in the Magnificent Seven group of mega-cap growth stocks weighing heaviest on the tech-laden Nasdaq. Trump escalated his criticism of Powell on Monday, saying the US economy is headed for a slowdown unless Mr. Too Late, a major loser, lowers interest rates now, in a Truth Social post which raised concerns over the Fed's autonomy. The Sino-US trade rift deepened after Beijing warned other countries against striking deals with the United States at China's expense, adding fuel to the spiraling tariff war between the world's two largest economies.
Now, with US markets buckling under the weight of political interference and economic uncertainty, the stakes couldn't be higher. What began as volatility triggered by trade tensions has now morphed into something more systemic, a credibility crisis for the Federal Reserve and a confidence test for investors around the globe. Now, as Trump's attacks on Fed Chair Jerome Powell intensify, calling him names like Mr. Too Late and a major loser, questions are mounting about the independence of the world's most influential central bank. Add to that Beijing's hardening stance on trade diplomacy, and it's clear we are not just watching market jitters, we're watching the rules of economic engagement being rewritten. Now, joining us now for insight and perspective is Dr. Stewart Nixon. He's the Deputy Director of Research at Ideas. Now, Doctor, let's start with the markets. We've seen a sharp sell-off across US indices, with the S&P 500 down over 12% since the start of the year. What, in your view, is fueling this volatility? Is it more about Trump's trade and tariff rhetoric or the pressure campaign on the Fed?
Yeah, while tariffs are commanding the most attention, market jitters reflect wider uncertainty from the Trump administration's disruptive and unorthodox approach to economic policy making in general. Trump's campaign against Chairman Powell contributes to this uncertainty, providing a destabilizing force of potentially major consequence. Not only share market losses and volatility, but US dollar depreciation and US Treasury bond yields and the rises in those reflect the damage that this uncertainty is doing to investor confidence.
Yeah, so Trump has now publicly called names towards Jerome Powell, major loser, Mr. Too Late, for not cutting rates fast enough. How significant is this clash for investors? And is it undermining confidence in the US central bank?
Yeah, hostilities between President Trump and Chairman Powell are jeopardizing long-standing institutional separation. Trump is not shy in his desire to interfere with the Fed, and the Fed itself in return is being accused of playing politics. So in the days between Trump announcing and pausing his tariffs, US Treasury markets actually came dangerously close to becoming dysfunctional. Some commentators interpreted the lack of Fed intervention as an episode of Powell playing politics, or even a game of chicken, if you will, with the Trump administration. While financial disaster was averted, thankfully, investors are questioning their US asset exposure amid a rethink of the US as a safe haven economy under this unpredictable administration that Trump is leading. And also a compromised Fed Reserve. The two go together. That shares and bonds are retreating together is an unusual and significant development in the global economy that highlights how uncertain investors are, both about Trump policies and about the Fed's role as a financial safety net.
Yeah, well, what you raise is there are clearly growing concerns about the independence of the Fed. Why is central bank independence so crucial? And what could be the long-term consequences if this perception is eroded?
Yeah, well, Fed independence, by which we mean the Fed is operating separately and not subject to government orders, is a critical institutional pillar supporting confidence in the US economy and the functioning of financial markets globally. The Fed exercises monetary policy, it buys and sells government securities, it's responsible for financial system regulation in the US. That it operates without political interference is important to safeguarding the interests of economic stability and the US and global peoples. Independent central banks are have consistently been found to be better at exercising monetary policy to support stable long-term economic growth with inflation contained. Confidence in the US institutions like an independent Fed also underpin the attractiveness of the US dollar and finance, making it a safe haven for large but low-risk investments. On your question of perceptions or the actual erosion of Fed independence, if that were to occur, that would actually require a substantial rethink of how the US economy, its institutions and governance are understood. Investor confidence in the US could plummet, and a global reorganisation and liquidation of capital is not actually inconceivable. A shock of this magnitude would do both significant short and long-term damage to the economy, to trust in institutions and the relationship between markets and politics in the US, but also potentially globally. And it bears reminding that major shocks are particularly harmful to poorer countries, to smaller businesses and to the most vulnerable households.
Yeah. So I would love to speak more about what's to expect next, but unfortunately we'll have to keep on continuing our monitor of the whole situation. Thank you so much. That was Dr. Stewart Nixon. He is the Deputy Director of Research at Ideas